And Jarno Marchetto, Director Head of Innovation at Cornèr Bank, will speak about faster and faster, and I'm sure you will speak also very fast about the revolution in payment systems and what payments and virtual cards together can achieve for all of us.
Sure. I'll try to talk very fast. Sure.
Looking forward, that's the title of your speech. Looking forward to it. Very warm welcome.
Thank you so much. Thank you. Good afternoon, everybody, and thank you for having me with you. I said I'm Jarno Marchetto. I'm going to talk to you about two innovations in the area of banking and financial services, more precisely in payments, and how these innovations are helping us moving money around the world much faster. So briefly about me, I'm responsible for innovation and business solutions at Cornèrcard, which is the payment card division of Cornèr Bank. And Cornèr Bank, as you may know, has been around since a while. We are specialists in banking services, in particular in payments. We've been a Visa International founding member and the first issuer to issue a card in Switzerland. Okay, let's start. Moving money, moving the world, the power of payments. So before we start going into these details, let's recall together what's the importance of payments for the entire economy. I would say payments is like the circulatory system of the economic world. At one end, they enable the exchange of goods and services. They allow individuals and small businesses to be included in the financial system. I would say that this is the first step into financial inclusion. And at a completely another level, I would say that this is really the backbone of the global trade. They have helped really moving assets from one country, one region to another one. And let's recall also a little bit the scale of payment, so let's say the order of magnitude. So in 23, on let's say all card networks like Visa and MasterCard, in total we had hundreds of billions of card transactions. And the same order of magnitude is true also for bank transfers. So it's very big numbers. Okay, now let's start with the first innovation in this field. This is instant payments. So what are instant payments, or more precisely, account-to-account instant payments? To put it simple, they are like normal bank transfer, but with a very new key feature, and very important one, I would say, that funds are finally transferred immediately. So the receiver doesn't have to wait days to get the funds. And if the receiver is also, let's say, a provider, a supplier of goods and services, this means that there is no credit risk anymore. So it's very convenient. And also convenient because to access instant payments, you don't need any new platform or app. You just use your normal existing online banking services. Once again, I have to say that Switzerland is leading the way. So we are one of the first countries introducing instant payments together with other countries and regions. As was said before, we've been live since August 24 with a new generation of the central payment infrastructure, which is called SIG5. In Europe, this has been around since 2017, also with a global update of SEPA, called the SEPA Credit Transfer. And there are also other countries, regions that have implemented, let's say, their own specific instant payment systems for specific use cases. You see some of them, Netherlands, Germany, and so on. What is important to recall here is that, let's say, legacy systems, legacy account-to-account payment systems were not conceived to support instant payments. So it seems easy, but it was really need to fully update or upgrade the systems, or even to build new ones to reach this. Now, let's have a closer look to the differences between Switzerland and Europe, because I think these are, let's say, the two networks we are also using much more often. So in Switzerland, I said live since August 24, and then with the smallest bank that will update until end of 26. While in Europe, there is a big difference. This is mandatory for all banks, as for the receiving part, starting in January 25, meaning that in few weeks, you will have the SEPA network completely able to receive instant payments transfer. When we look at the sending functionality, here we have a key difference because in Switzerland, this is not mandatory, so banks can implement it or not. Many banks have already done it, and some of them will follow in 25, but in principle, nobody is forced to do so. While, you see, in Europe, this is mandatory for all banks, is it small or big, by October 25. Means again that SEPA will be able to send and receive instant payments, at least in the Eurozone, within 1 year. Other banks which participate in SEPA and are outside of the Eurozone will follow, let's say, in subsequent phases. Now, as for pricing, there is also a key difference. In Switzerland, there is no regulation, so a bank can charge an additional fee to process an instant payment, while in Europe, the instant payment cannot cost more than a traditional transfer. And so summarizing these, let's say, regulations, you see that very probably without further intervention, we'll see in Switzerland, I would say, like a slow adoption, and let's say the normal system and the instant payment system will very probably coexist for a few years, while in Europe, we will see for sure a massive shift already in 1 year, and then in 3 years, basically, all payments or account-to-account payments will be replaced by instant payments. That's a key point. Now, let's move to the second innovation I want to talk to you about, which is virtual cards, or more precisely, virtual payment cards. What are they? Basically, they are like normal cards for which we don't produce any plastic, any physical card. And they exist like basically card data on IT systems, on the issuer system. They look simply like a normal card data. Basically, they have the 16 long-digit numbers, so the primary account name, and the PAN, so-called PAN. They have an expiry date, they have a security code, and for sure, obviously, you can use them for online transaction. But then, thanks to tokenization, more on this later, you can also digitize these cards on physical devices like smartphones, smartwatches, and use them at the point of sale. What has been the evolution of virtual cards? In the early stage, used basically just for online transaction. Then, thanks to tokenization, we had 2 important moves or advancements. The first one is that now you can create virtual cards, which are actually tokens, with very specific settings and configuration. For example, you can say this card has a spending limit on a daily basis of X, on a monthly basis of Y, recurring budget of something else. You can use it only in this region and only at this merchant, and so on. So you have really a lot of controls, which are otherwise impossible with the classical cards. And then, again, thanks to tokenization, you can bring these cards also on physical devices. The current trend now is to embed these virtual cards into application. And if we think about corporates and businesses, to have basically them in ERPs, expense management platforms, travel management platforms. So you generate and use the cards directly from these platforms. Okay, now that we have seen these 2 innovations, 2 advancements, let's compare them because they have very important differences. We are talking about payments, seems like a little bit boring and all the same, but it's not the case. So first, let's look at network sites and acceptance. Instant payments, they have their own systems. They are limited typically in region and currency. For example, if you use SIG5, we are talking about Switzerland and the Swiss franc. That's it. If you use SEPA, we are using, let's say, a European system for euro. While card networks, let's say, benefit from a global reach, global acceptance in basically all currencies. The second difference is at processing speed level. We are talking about seconds, but let's say cards, is very, very fast, less than 2 seconds typically. Instant payments up to 10 seconds. And this could make a difference, in particular when you pay at the point of sale and you have a queue behind you. In terms of protection, you know that cards typically offer a lot of protection. For example, if you pay by card and the merchant is not delivering goods and services as promised, you can open a dispute, you can ask for a chargeback if they don't deliver. Most cards also offer insurances. For example, when you book travels, you have many security layers, and all this is simply not available on account-to-account payment networks and even on instant payment networks. The same is also valid for controls. Again, with cards, you have a lot of controls. You can also implement very advanced approval flows, and all of this is not available for instant payments. Think that, for example, the SIG5 in Switzerland allow, let's say, an hard limit is simply an hard limit set in the system of 20,000 Swiss francs per payment, but I would say this is very trivial, too easy, let's say, also to implement a very simple fraud prevention system. As for funding, this is obvious. There is a difference in the sense to process an instant payment, you need to have funds on your bank account. So you have to have liquidity available. While for virtual cards, for credit cards, I'm talking about, you can leverage the credit line that you have at 0 interest rate and also the deferred payment feature. As for fees, also here we have a key difference, but on the other end, that's better, let's say, in terms of account-to-account payments and not cards, because to receive an account-to-account payment, even bigger amounts, this is basically free for the merchant, the receiver. Obviously, you have like basic fees to access the banking system, but otherwise nothing. While for cards, as you know, the merchant has to pay a merchant fee to be part of the network, and even corporates using this solution may incur in, let's say, some costs. The typical use cases are also pretty different. Instant payments, typically person-to-person payments. I mentioned here salary payments, bill payments, this kind of stuff, while for cards, business travel expenses, corporate procurement, online advertising. Now, why would you could ask, okay, but why are they a revolution? It's not simply an evolution or even a small step. Actually, as mentioned, for instant payments, it was needed really to completely upgrade the systems or even build new ones for virtual cards in terms of tokens. This was also a revolution in card payments. Remember, they offer really significant advantages. Let's recap. Instant payments versus traditional account-to-account payments. Finally, you don't have to wait 1, 2, or even more days for the transaction to clear, for the receiver to get the money. That's a matter of seconds, you've seen. And for virtual cards versus the traditional cards, also here you can create cards on the fly with a lot of controls. You can create and manage cards directly within the desired application you like to use. You can set custom parameters and limits for each card or even each transaction. And again, you can even automate data capturing within ERPs and so on. Okay, now coming to, let's say, a conclusion, what could be future development for this both innovation? I think one possible scenario, or I think one scenario I would hope is really the convergence of both services. Why? Because, again, these are very separate systems. Like instant payment, they use their own systems. The card payments, again, they have several brands, but also very separate from them. If we blend them together, if we mix them in the right way, we can implement also completely new use cases, which seems again like very easy, but are not and are very convenient. Think, for example, you're a corporate, you want to use the credit line provided by your virtual card, you take the funds from there, and in one shot, you push the payment to a bank account in a completely another country, completely another bank. This is today simply not possible in one shot. For example, another one that you could think about, you have liquidity on the other end. On your bank account, you are going to pay a supplier. The supplier says, okay, look, I would like to get the funds on a card because then it's for me much better to benefit from the global acceptance of a card network. Also, you're blending the two together. You may push the funds from your bank account to the virtual cards. And the virtual card then can be used, as we have seen also, in the physical world through tokenization. So again, I think by mixing up them, the advantages will sum up and even multiply. Again, we are moving for sure money much faster between regions and networks, We benefit from the possibility to optimize liquidity and capital cost. If you have money, you take it from the account. Otherwise, you can leverage the credit line from the card account. You have more controls and protection, multi-channel usage, integration options, which are much more. And obviously, you can cover more use cases or even new and innovative use cases. With this, I hope that I talked fast enough. I thank you so much, and if you want to continue discussion during the apero.
Thank you, Jarno, for this. Thank you so much for this firework around the payment systems. Maybe one quick question. You spoke about this possible convergence, right, between the two systems. Do you already see this happening somewhere in practice?
Not yet. It's just in my mind.
It's just in your mind. Okay, wonderful. Somebody is asking, how does cryptocurrency challenge instant payment?
No, I would say these are, again, like we have seen now, so account-to-account payment and cards. So basically, they are completely different payment rails. I don't say that they challenge them. Obviously, they are different, and also the user very probably also different. So we don't see a lot of collision. But again, we can also think about merging, blending cryptocurrencies with instant payment. Why not? And then maybe start from one wallet and have these funds landing on a bank account in one shot, which again is not always much easy, let's say.
At the moment, not happening. Having done a crypto transaction just recently, took 3 days, right? Having instant payments not costing more than normal payments in EU, isn't there a political motivation to be less dependent on US with Visa, MasterCard?
Okay, to be honest, as I'm also in a, let's say, important association in Europe, and we also talk to the regulators there, obviously there is a point on be more European and not dependent from these networks, which are completely US-based. But on the other end, I think it's really, let's say, a move now to make instant payment cost like traditional payment, really going in this direction. Otherwise, as I was mentioning for Switzerland, without this regulation, we may see a slow adoption simply because maybe banks doesn't allow the sending part, or again, they put a charge on each payment, and then obviously you may say, okay, this time I take it or not. And in this way, the shift will be happening. Yeah.
Okay, thank you so much.
Thank you.
Thank you for being here.
Thank you.